It is a Thursday. Well, it feels like this week has gone on for quite a while. Let's go over right now. Of course, on Tuesdays and Thursdays, we are joined by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Check out his newsletter. Check out his book. Of course, we've really enjoyed having Tim on through all this chop, getting some good kind of insight into everything going on. Tim, how are you doing? Listen, look, the SPY, right? I mean, we're up 1.85, reaching some of those gaps, but on very light volume. What are you seeing?
Right. Yeah, we're probably going to find resistance here. This thing's, you can see my screen, right?
Give me a second. We're going to get that up. I think that the producer is working on it now.
So we don't have it right now?
It's not live, I don't think, in the den at least. There we go. We're good now.
All right. This is the arms index. Actually, the top window, you can probably see my little,
yes,
red dot there. Anyhow, 10 days is that 0.69, which is basically neutral. And I do a 5-day, that's 1.14. We have a 2-day, 1.16, and down at the bottom we have a 1.13. The most important one is the 10-day. The 10-day, you should get up around 1.2, and that shows panic. There's really no panic in the market per se. 10-day average is basically 2 weeks of panic. And 2 weeks panic can really produce a decent rally that could last at least weeks, if not months. So there's really nothing here for the intermediate term suggests this rally is going to continue. So I think we're going to probably find some resistance basically at the previous highs, which we'll get there. Okay, this is kind of developing here. There's a lot of different things to look at. You know, the previous chart looked at the trend as a way of forming panic. Panic only forms at bottoms. And the top window here is the McClellan oscillator. It's NYSE McClellan oscillator. And it's coming off of a low we had here a few days ago. But I pointed out the times when this McClellan oscillator goes from basically minus 300 up to plus 200. And if you kind of draw the line down there, that comes in, looks like about this vicinity, probably picked out this rally here. Then we had another one. Anyhow, this is the 2022 low, and the McClellan oscillator hit two bullish signals. That's going from minus 300 to plus 200 within 30 days. Here's kind of the formula for it right here. Actually, let me get down here to, they're not going to let me do it. So anyhow, we basically hit minus 200 here, I don't know, a couple of weeks ago. And it's almost at 200 right, or plus 200 right now. We're actually 1.66. And this is yesterday's reading. So we may push up probably to plus 300 or plus 200 this week. So it went from basically minus 300 to plus 200 within 30 days. And so I'm thinking we're in the process of building a base. And also the one indicator I kind of developed works pretty good. It's a 5-day average of the advanced decline, which is the bottom window. It has to go from 0.7 to 3.0 within 21 days. We had one starting in April. We're still kind of high, so there's kind of advanced decline. But we may go back down one more time and get another bullish reading on the advanced decline going from 0.7 to 3 within 21 days. So if you get a couple of them, you're getting a cluster of base building type indicators. Mm-hmm. So I don't think we actually found the final bottom yet, but we're in a basing problem. So I don't think there's another big leg down starting. I think at worst case, we're probably going to test the previous low. Okay, how we get... For some reason, I'm going to...
Do you need me to pull up the chart for you?
No, I'm trying to get down to the second chart, and it's not letting me do it.
Give me 1 second here.
And I don't know why.
Well, here, what I can do, if you're able to pull it up on another screen. You got it?
Yeah, I got it. I'm going to switch this over to Highlander here. Yeah, it kind of froze up on me for some reason. All right. Here's the S&Ps now. This is early today, we're basically right here. If you see that, I think we're going to go basically test this high, which is basically the April 9th high. That volume that day which is right here, which was 241 million shares. To get through that high, for this market to keep going, you have to break that high on at least equal volume. And so we're not going to do that. This is intraday here. We're lucky to break yesterday's volumes, but we're way low. So we're not going to break that high. That high is going to be resistance. So if we can't take out the previous high, what the market does is, well, if we can't take out the previous high, we'll attempt to take out the previous low. Well, there is a low right here, but most likely high and low of this range right here, we're probably going to go all the way back down to this low. And I think we may break that low and take a shot at this low. This low here will determine, in my opinion, that's where the next low is going to be. We'll probably break it a little bit, but as long as we, on this pullback, we get the trend readings way up to around 1.2 or higher, and this pullback may take a couple of weeks or longer. And I think that's where the bottom's going to come in. The bottom's going to come in this vicinity down here, somewhere probably below this low a little bit, but not much. So that's where the bottom's going to be. And you should see a lot of panic, bad news on whatever, the market and how bad it is and all this other stuff. Those are the type of things you want to buy. So when there's fear out there, that's good. When there's no fear, that's bad. So that's what I'm looking for. So I'm thinking we're topping. We're awful close to a top in this vicinity of some sort. Yeah. It may stop here, try to rally a little bit, but I think we're going to probably come back down and go to the probably in May sometime, because that's not too far away. Sure. And but that's what it looks like. And here's the 10-day or the 21-day trend at the bottom here, which comes in 106, which is neutral. Next one up is the 10-day trend, 0.6. I expect both those trend readings, 21-day and the 10-day, to get up around 1.2. And if it does, that gives quite a bit of information that we got enough fear in the market to have a decent rally. But from 550 down to I think it's 493 range. Yeah. That's a heck of a drop. It is. Will I get a clear signal on that top? Not sure yet. So I take clear. The best signals for my system come at bottoms. Tops are not as clear. So we'll see how that happens. If I do end up a decent sell signal, I'll issue it. If not, I'll wait for the next pullback. So, but that's a heck of it. I think it's about a 15% drop. Yes, if I'm not mistaken, somewhere in that vicinity. Because when we traded this from there to there was 9.5%. So we're probably talking 15% drop. So we'll see how that works out. So this rally is going on right now. It's not going to continue. We don't have the energy to the upside as far as volume goes. Advanced client showing some promise. McCall and Oscar showing some promise, but nothing. We're going to end this rally pretty quick. Understood. Yeah, I have some similar sentiments on this movement to the upside. I know we have gold up next, but Tim, we have some questions about the Zwag breadth thrust indicator when you get back, if you wouldn't mind going over something. All right. Yeah, folks, stay right there. We'll be right back with Tim Ord after the break. Welcome back, everybody. This is Jacob Shoup. We're joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Tim, before we went to the break, I had some people send me a picture, right? And this is, people were saying the Zwag breadth thrust indicator was triggered today, and curious if you had any input on that, if you're seeing that as well. I haven't checked it. Normally I keep an eye on it. I don't have that right in front of me, but these two indicators, that's the reason why I went back to this chart. Yeah. This one on the bottom did trigger a couple of weeks ago, and this is probably going to trigger, if not today, probably tomorrow, as far as McCall and Oscar. And the Zwag, I checked it yesterday. It wasn't close, but if it does, that adds fuel to the bobbing process, because the Zwag breadth thrust indicator don't trigger unless it's unless there's a bull market forming. So that's the reason why I'm thinking worst case scenario is a April 7th test. Sure. And that's going to form the bottom. So I'll look at the Zwag breadth thrust indicator tonight. just to verify that, and we'll cover that. I'll show that on next Tuesday's show. But,
perfect. Yeah.
I didn't. It could be. Yesterday I didn't see it, but maybe today it did. I know it's advanced Klein, because of this indicator right here. It's pretty strong. We're up 4.0 on this on a 5 day. So there is advanced Klein wise. This market is pretty strong. So, but anyhow, I'll check it tomorrow.
Perfect deal. So,
right.
I mean, in the event that it is triggered, I mean, as you said, it can potentially reinforce that theory of a pullback, right, down to those levels.
Right. You want to give as much confidence as you get once you start throwing money at something. You don't want to guess. So if you get more indicators saying that you're probably right on the direction of the market, the more safe, I guess, you might feel. So usually, I really don't talk to people about the market because whatever they feel is what the news is projecting to them, and usually they're on the opposite side of how I'm looking at the market. So I usually don't convince my methods on anybody, because usually I'm buying when everybody else is selling, and I'm pretty much selling when, or you're close to it, whenever everybody else is buying. And you really got to stay in that direction to make money in the market. So anyhow, but yeah, it's good. It's I think the market's definitely turning more bullish here. So we'll see how this, I think this May 7th low will look once we get there. So, which is a couple weeks away. We'll see how that develops.
Sure.
Let's look at the gold market. This is, I think, where to be over the next several years. This is kind of a repeat. It's updated today. The bottom window is the GDX up-down volume. That's a cumulative, and this is a monthly chart. So this is actually making higher highs, higher lows. Same with the monthly advanced decline GDX cumulative. It's making higher highs, higher lows. As long as those two indicators stays above the mid Bollinger Band, we're in an uptrend. This is a monthly chart. You can have pullbacks on a daily basis, but as long as the monthlies remain bullish, you should buy the pullbacks. So this is a bull move. So it's not where, in my opinion, not where anywhere near ending. So trends up. We did sell our long position. The reason why on GDX is once you get about 80% above the upper Bollinger Band on the monthly time frame. So this is a monthly. So and we sold around the 50 range, give or take. So I wanted, we're starting to back off already here. This is today's trading, but if you can see here, this is about 100% above the upper Bollinger Band. This is about 80%, give or take. And this one looks like about 80%. This one at one time was about 90% above the upper Bollinger Band. It's starting to back off now. But we got major support around 39, which is actually happens to be where this trend line lies. So that's where I'm heading for. RSI on a couple of those monthly RSIs got up around 70. Kind of confirms that you're making some sort of a worthwhile high here.
Sure.
So nothing significant, just a pullback and an uptrend. Here's 3 drives to the top pattern we talked about on your movie or on your show. Anyhow, describe is the whole key of this pattern, this 3 drives to top pattern, is what happens on the second high. It has to have increased volume to the downside, and also has to retrace at least 618% of the previous up move. And that happened here. You can see the 68-point retracement did more than that. And you can see how the volume really picked up here on that decline. So that was your warning sign that the market was going to pull back. Then we had a surge to the upside, and we sold out right at the 50 range, went up a little bit higher, but we're starting to pull back now. 3 drives top patterns have according to the books, is a timeout and an uptrend. They're usually not topping patterns. They pull back down to where the pattern began, which happens to be 39. Then from there, we start moving up again. And there's a lot of confirmation on the longer-term charts suggests that this is what the next really good buy signal will be right around this vicinity on 39.
I see.
So that's what I'll be looking for. This is a bigger chart. This chart goes back to 2012. There's a breakout line there. This is HUI. But this is a weekly HUI ratio. It basically it's when basically what this chart says. Gold stocks are cheap compared to the metal of gold. So when the ratio gets up around 0.17 or higher, you're usually at a high. These are some of the highs over the last decade or better going back. And when this ratio is below 0.12, where I think we're 0.12 right now. Yeah, there it is. It's kind of hard to draw. Anyhow, this is a good buy, and that's all the pink areas.
Yep.
So every time this pink area, it was a good buy, and this kind of shows you where it was. And the blue areas, when the ratio got too high at 0.17 or higher, that's all the blue areas. So we're still in the pink area, or right at it. So in general, on the bigger time frames, this is still a good buy. In previous, but we had one in 2022, we had another in 2024, and we've basically been in the the pink area since basically late last year, and we're basically still in it. So we're still at a buy signal as far as cheapness goes compared to gold stocks to gold. So even though we broke out, this ratio still remained low. So it hasn't really rallied yet per se. So that's the reason why I think we're going to go on to the upside for a while. How high? We could discuss this chart. We got time.
Yeah, absolutely. And then someone has a question as well on maybe thoughts on silver. So if you stay right there, Tim, we'll be right back. Welcome back, everybody. This is Jacob Schuper, joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, we were taking a look at the monthly HUI NDX.
Yep. This chart, it's really interesting. Actually, this low right here almost perfectly touched this low back here.
Yeah.
I mean, it came right down, stopped right at it, turned right back up. But anyhow, this chart is the monthly HUI NDX ratio, and goes back to it started, it looks like about 1995. So you can see what happened here. It appears to be a 12-year cycle where the equity market outperforms gold, and the next 12 years gold stocks outperform the equity market. And how you define that is the RSI. So when this ratio is rising, HUI is outperforming the NDX or QQQ or NASDAQ. And when it's declining, then NDX is outperforming the gold stocks. So gold stocks really took a beating from 2012, even though we had some bounces along the way. Gold stocks in general worked lower all the way into 2024 compared to the price of NDX. But what happens here, if you notice, when you get above, I did the RSI of this ratio. So this is a monthly RSI on the HUI NDX ratio. And if you notice, when this trend is going up, the RSI basically stays above 50. And when it's going down, it's basically, when this ratio is going down, the RSI stays below 50. So that's the reason why I highlighted that. So this, except for that one area right here, had a little dip there, but it came right back to 50 again, above 50, and kept on going. So we could try to get it above 50 a couple of different times over since 2012, but really didn't do it until right now. We're basically 62.63 right now. So we're way above 50. And so this is initiation of an uptrend. You got to have a sign of weakness off of a high, which is identified with the RSI falling way below 50, or you can have the other way, a sign of strength off of a low on the RSI, which is a reading way above 50. So we got it way above 50. So we're starting a new trend up to the upside according to this ratio. How high the ratio will go, don't know. But I think it may last 12 years. Something similar we had from 2000 to 2012. The gold market just outperformed the NASDAQ in a big way.
Yeah.
And I'm thinking we're probably going to start that and rally for, I got different indicators say we rally into 2027 as a cycle one. But in general, I think we're just going to keep going for a while. So this is... gold stocks, if you look at them, there's a lot of penny stocks in the gold stocks.
Yeah.
They're all over the place. And I think a lot of those penny stocks may turn into, $10, $20, $30, some of them. So we'll have to wait and see if that happens or not. But I think we're in the early stages of a major move up. And at the moment, I don't see any signs, worthwhile signs, of a top of any consequence other than a pullback from 39 to GDX, which I think will be a major buying opportunity because I think we're still in the early stages of this bull market. And we'll be able to tell as things go along, if this ratio starts to turn down and falls way below 50, it'll be a clue that, okay, it ended. But we're not anywhere close to that. We're still in the rising stage here. So I think there's a big there was a lot of millionaires made in 2000 when this bull market started off in the gold issues, and a lot of those penny stocks turned into, $10, $20, $30 stocks. So I'm thinking this is a good chance this time around this may happen. So, but we'll play the numbers as they come along. But I'll be watching this indicator. You don't have to watch it every day, but to me, we're in the early stages of a massive bull market.
No, this is a really interesting ratio, actually.
Yeah. You measure the energy of this ratio. So you're comparing the HUI, which is basically a gold bug stock. Yeah. So there's two different indexes here, and you're measuring the acceleration between one to the other. That's what the RSI does. So I think NASDAQ it can go up too.
Sure.
I'm saying HUI will go up faster.
Yeah, it's relative, right?
Relative. So that's the reason why this RSI, I think, is probably going to stay at 50 and higher for a while. So we'll see how long that while lasts. But once it starts falling below 50, say we get down to 40 or 45 or something, that'd be a big warning. And I'll point that out as time comes forward. But right now, I don't see anything happening other than, I don't know what gold's going to do. Gold may keep going up, but I think gold's actually going to slow down, and gold stocks going to increase because I do have a ratio between the XAU and gold ratio also, and I see no signs of anywhere near signs of. So these gold stocks are probably going to start rallying. They're just going to kind of keep creeping up until everybody realizes that maybe 5-6 years down the road that gold stocks have been a good investment.
Right.
By that time, the rally's half over. So, but nobody's paying attention to it right now. So that's good.
Yeah. No, definitely. No, that's a really interesting ratio. Huh.
Yeah. So it's something to watch. You could put to the SPX2, but for some reason at NASDAQ kind of leads the S&Ps. In bull markets, you want the QQQs to outperform the SPYs. That's what happens in the bull markets. And right now, I think last time I looked at the ratio, it's been a couple of weeks. NASDAQ is way underperforming the SPY, so that's kind of a sign. But I still think second half of the year will be a good year, but we may be starting a huge trading range, is what I'm thinking. So we'll see how it develops. But I think this year, I think that the great buy will be the April, getting back to the equity market, I think the great buy will be the April 7th low vicinity, and we go back up, probably break the previous high of March or April 9th, which is up around that 550 area. We may break that a little bit, and that's where all the big gains will be being. But yes. I don't think we'll keep breaking to new highs later on. So, this will be the fourth or fifth year in a row we'll be outperforming the market, and so far we have so far this year, even though it did take a big hit off of that January high or February high, wherever it was. So we'll see how it happens. But the gold market, I think, is where the serious money is going to be made.
Totally.
Or gold stocks. Gold will do well, but not as well as the gold stocks. So we'll see how it develops.
Awesome deal. No, seriously. And you're talking about, outperforming. I mean, folks, you can go to ord-oracle.com, check out his newsletter. Really recommend doing that. Tim, we had a question. I know we don't usually look at too much silver when we're on here. You shared this, I think it was the silver to GLD ratio, maybe a little while ago. We're not really seeing silver move with gold in that exact way,
Yep, but I'm thinking that's what's going to occur next. That's a good point. Basically, anything precious metals, put it that way, are going to perform. But silver, I think, is just starting to turn the corner to the upside.
Okay. Maybe we can talk about that Tuesday if you want to, but regardless, looking forward to talking to you Tuesday. Tim, thank you so much for coming on.
All right. Thank you.